What if the same GDP numbers that shape interest rates and markets could be instantly verified on a public blockchain? In a world first, the US Department of Commerce is teaming with Chainlink to publish official economic statistics on-chain. Today we explore why it matters, how it works, and what it could mean for finance. Let's dive in. Blockchains run smart contracts, but they can't access external data on their own. That gap is the Oracle problem. Without a secure feed, smart contracts can't trust outside facts like GDP, prices, or weather. Chainlink is a decentralized Oracle network that connects blockchains to off-chain data, powering thousands of integrations across DeFi and institutions. Its data feeds secure vast value and carry enterprise-grade security certifications, giving institutions confidence to consume on-chain data. That reliability is what lets banks, protocols, and developers build mission-critical apps on-chain. Recently, the Department of Commerce's Bureau of Economic Analysis began publishing official macroeconomic statistics onto public blockchains via Chainlink. This creates an auditable, tamper-evident distribution channel for key economic releases. First, real GDP, level and annualized percentage change. Second, the Personal Consumption Expenditures Price Index, level and change. Third, real final sales to private domestic purchasers, level and change. These data are published on the same schedules as official releases, monthly or quarterly, so on-chain feeds mirror BEA timing. Initially, the feeds are live across 10 ecosystems: Arbitrum, Avalanche, Base, Botanics, Ethereum, Linea, Mantle, Optimism, Sonic, and ZK Sync. With support for more networks over time, a second provider will also publish quarterly GDP releases across multiple public chains, expanding reach. Leaders frame this as a move to make America's economic truth immutable and globally accessible. The effort aligns with a broader push to modernize how official data is shared and to encourage blockchain innovation at scale. Tamper-proof distribution aims to increase transparency and public trust in official statistics. On-chain macro data unlocks many practical applications across finance and crypto. Automated trading and DeFi protocols can adjust parameters like interest rates based on real GDP and inflation trends. Prediction markets can crowdsource inflation expectations using live official feeds. Tokenized assets and inflation-linked tokens can reference verified government statistics as settlement anchors. Protocols can manage risk more precisely when macro conditions are provable on-chain. Openly verifiable on-chain data reduces misinformation, fostering public trust and accountability. These innovations appeal to crypto-native projects and traditional institutions, like banks and asset managers, looking to tokenize real-world assets. Imagine new financial products and automated risk systems built on provable macro data. Chainlink has engaged deeply with regulators this year, discussing compliance aspects for oracles and market structure. That engagement includes task force participation and meetings with lawmakers about crypto market frameworks. Policymakers increasingly view decentralized oracles as critical infrastructure for tokenized funds and stablecoins. Partnering with the Department of Commerce shows how oracles can meet compliance needs while enabling innovation. Markets reacted. Chainlink's native token rose modestly and other oracle-related tokens rallied, reflecting investor excitement. Major financial players are experimenting with oracle-driven tokenization to accelerate real-world asset adoption. Other networks are targeted via complementary initiatives, broadening the ecosystem. Other countries are exploring similar transparency initiatives, from budget and financial data on-chain to government dashboards. This suggests a broader trend toward leveraging blockchain for public data and governance. Concerns remain: latency between releases and on-chain publication, secure governance of oracles, and potential misuse for speculation. Decentralized infrastructure and enterprise security practices aim to mitigate these risks. Importantly, the government remains the authoritative source. The blockchain is a verifiable distribution channel, not a replacement. Publishing macroeconomic data on-chain marks a historic convergence of public institutions and decentralized technology. By teaming up with Oracle networks, the Department of Commerce signals that blockchain can be trusted infrastructure for critical data. What apps will emerge from real-time on-chain GDP and inflation feeds? Tell us in the comments, and if you enjoyed this deep dive, like and subscribe. Thanks for watching. Stay tuned for more on the intersection of crypto and public policy.